Fibonacci levels and Fibonacci ratios are very popular with traders, but are they using them the right way and in the right situations? My guest today is Anne-Marie Baiynd to talk about that. So Anne-Marie, Fibonacci is very popular, but are traders using it the right way?
A lot of times we don't use them the right way. Fibonacci's are meant to be supplements to market movement and wave action. And many times we just slap them on, we look at a chart and we go, okay, I need to go high to low. And we don't think about that wave action. But it's also a matter of trend. Remember, your goal, unless you are selling options that involve time decay, your goal is to get into a stock at one level and have it move to another level for you to get out. And you can't do that without trending. And so many of us say, hey, I'm going to use the Fibonacci's, but what we have is sort of a flat environment. So really, as commonplace and everywhere as it is, that 50 moving average, that 20 moving average, that 30, those sorts of things are critical to look at. I like to say if it's at 2 o'clock or 3 o'clock on the hands of a clock, or 4 o'clock and 5 o'clock, you've got great momentum. You can slap up your fib there and wait for it to come into support and then move forward. But if you're meandering around 3 o'clock, not a good place to really use your fibs, because you'll be bouncing from one fib back down to the other and then sitting in a tight range.
All right, is there a specific type of time frame that you like to use Fibonacci on most, that you think it's kind of most effective with?
You know, the great thing about fibs is they work wherever. The thing is, have you got the patience to wait for it to come to the level? Because, you know, when we're trading, one of the biggest things is we see the setup, but we can't wait for it. We have to jump right in, and that happens to really takes away our confidence in the fibs if we jump on in and then have to wait around. But it doesn't matter what time frame you use. Really, if you could trade it, you can slap fibs up on a 1 minute. You really wouldn't want to unless you're buying 1 million shares of something, but it works. And so the key element there is, what's your comfort level? How well do you trade a 5 minute? How well do you trade a 15 minute? Do you have that analysis paralysis event that occurs? And see if it's like that, you need that longer time frame, but the fib will work no matter where it is.
All right, so if it's most effective on a stock or market that's trending, everybody wants, of course, to hit the 618 level perfectly and bounce off, but it's rarely that. I mean, do we look at it more of a zone, or do I want it to come as close to that thing as possible before I decide?
That's a terrific question. It really is. Now, here's what happens. We do want it to come to that 61.8. Very often it does, but remember, there's always someone there waiting to stop out the guy who gets into the trade early, if he's trading the reversal off that 61.8. So it is a zone in a sense. There is a space that you come to where it's a little bit above or it's a little bit below, or traders are setting up to argue there so that somebody wins. It becomes a tug of war. So really what you have to wait and look to see if a range is developing, or if everybody pretty much has said, nope, we're going to sell it here. And of course, you'll see that V shape, or you'll see that rounded / flat shape if they're arguing.
Anne-Marie, thanks for your time.
Thanks for having me.
You're watching the MoneyShow.com video network.